So we already know what is a provision, di ba? So a provision is, okay, let's go to the definition. So it is an existing liability of uncertain timing or uncertain amount. So dili pa siya sure kung kano sa may tabo or pila gyud exactly ang amount. But it's important that we can measure the amount reliably by means of an estimate. So what if dili nato siya ma-measure reliably? What if dili po siya probable, 'di ba? There are three conditions nga important nga present para makaset up ta og provision, 'di ba? Kinahanglan nga there is a present obligation arising from past events, and then there is probability of outflow of economic benefits, and the third one, the amount can be measured reliably. So kung naay mga conditions nga dili ma-meet, then it cannot be called as a provision. So kung dili siya provision, unsaon din nato siya pag classify. According to PS 37, we have what we call as a contingent liability. Nya, kanus aman magka contingent liability. First is the contingent liability is considered as a possible obligation. If you can recall our previous lesson on the provisions, di ba? Pag possible siya, more chances nga dili siya mahitabo kumpara sa chance nga mahitabo. So there is a 50% or less chance that the event will occur, there's a 50% or less chance that the event will occur. So therefore, mas dako ang tsansa, okay? Mas dako ang tsansa nga dili siya mahitabo. Okay? So possible ang iyahang level of certainty. So possible obligation that arises from past events and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. So therefore, kung ang obligation gani makuha nimo ang measurement or naa kay amount pero possible lang siya nga imuhang ma-incur or magasto or mabayaran in the future, then it is considered as a contingent liability. Nganong contingent liability siya? Kay naamay isa sa tulo ka conditions ang wala ma-meet. So balik ta sa conditions para matawag nga provision, di ba dapat? It is a present obligation arising from the past event. So obligation man siya, so mo-meet siya atong first criteria. Second is, may outflow of economic benefits. Pero the outflow should be probable. Pero in this case, this is possible. So, wala niya na-meet nga criteria. Therefore, even if ma-measure natin siya reliably, okay, but since it's possible lang, then therefore, that is a contingent liability. How about the second criteria para matawag siya, or the second circumstance di ay nga matawag siyang contingent liability? Kaya not necessary criteria, kay kani siya stand alone man ni siya. Pag possible obligation gani siya, even if ma-estimate na tong amount, it's a contingent liability. What if there is a present obligation but it is not recognized because it is not probable that an outflow of economic resources embodying economic benefits will be required to settle the obligation, or the amount of the obligation cannot be measured reliably. So what if probable siya, ma'am, na ay outflow of economic benefits? So kung probable po siya pero dili nato ma-measure reliably, then that is a contingent liability. Kung ma-measure nato siya reliably but not probable, so balik ta ani possible siya, then still it is a contingent liability. So balik ta, kung probable and measurable, ang duha may naa, probable and measurable, that is a provision. So check siya, okay? So given na siya nga present obligation, assuming nga given na siya nga present obligation ang case. So, check ang probable, check pod ang can be measured reliably. What if check ang probable, pero it cannot be measured reliably? So, sa may tawag ana, that is contingent liability. What if, ma'am, bali, probable, X, dili siya probable, but the amount can be measured reliably. Unsa man po'y tawag ana niya. So, ang tawag ana, contingent liability. So, what's the difference between the contingent liability and provision? Okay. So, the present obligation is either probable or measurable. So, balik ta sa akong explain ganiha, nga usaray na meet adtong remaining duha ka conditions. Again, given na siya nga na ay present obligations, ani na lang siya magtigi sa probability o katong measurability. So, kung either lang, probable siya but not measurable, or measurable but not probable, then that is a contingent liability. Balik ko na ako. So, kung usaray na meet sa duha ka remaining conditions, assuming nga given na siya nga present obligation gina siya, so kung probable lang pero not measurable, contingent liability. Kung measurable lang pero not probable, contingent liability. Kay kung both conditions are present, it's probable and measurable, then that is a provision. Okay, balik. So, if the present obligation is probable and it can be measured reliably, it is not contingent liability, but it is recognized as a provision. So, if only one condition is met, probable only, not measurable, or measurable only, not probable, then that is a contingent liability. So, what is the treatment of a contingent liability? So, kung contingent liability siya, as opposed, di ba, ganiha sa provision. So, sa provision, di ba, we have to provide or we have to set up the provision by recognizing it in the financial statements. So, unsa gani pasabot pag mag-recognize ta sa financial statements? When we say it's recognized, it is recorded. And kung recorded na siya, there is journal entry. Okay? So, unsa man ang journal entry, ana ma'am, pag mag-provision ta. So, mag-debit ta sa expense, mag-credit ta sa liability. So, again, pag moingon ta og recognize, di ba? It means it is recorded. Pag mag-record ta, na ay journal entry. So, that is for the provision. Pero kung contingent liability ang hisgutan, unsaon man siya. So, a contingent liability shall not be recognized. Therefore, there's no journal entry to recognize the liability. Gitawag lang siyang contingent liability in terms of the name lang niya, pero wala na siya sa listahan sa mga liability. So, unsa na may treatment niya? Contingent liability will be disclosed only. And what should be disclosed? The brief description of the nature of the contingent liability, estimate of its financial effects, indication of the uncertainties that exist, and the possibility of any reimbursement. Meanwhile, if it is a contingent liability and it is remote, no disclosure is necessary. Now let's review. So what would be the treatment if it is a provision? So if it's a provision, remember that we recognize the provision in the financial statements. So what do we mean by recognition? If we recognize it or we recognize the item, it means that it will appear in the financial statements. Kung mag-recognize ta, we record it in the books and there is a journal entry. Meanwhile, if it's not recognized, then therefore, dili ta mag-prepare og journal entry. So what is the treatment again for the provision? It is recognized, therefore it is recorded, and there would be a debit and credit entry. And what will be the debit? We debit the expense and then we credit the liability. If it is a contingent liability, remember that the liability is not recognized, although by name liability siya, but it does not appear in the list of your liabilities. Unsa na may buhaton? You only prepare a disclosure, and these are the required disclosure related to that contingent liability. What if in terms of the level of certainty, it's not probable, it's not possible, but it's only remote? So kung remote siya, then no disclosure will be necessary, and of course wala pud siya recognition in the financial statements. So again, kung probable and measurable, that's a provision. Prepare journal entry to recognize the provision. Debit to the expense, credit to the liability. So ang specific niyang account title depends on the type of provision. If it's a contingent liability, it means it's probable but not measurable, or it could be measurable but not probable. So therefore, prepare only the disclosure. Do not recognize the item in the financial statements, except that you present a description in the notes to financial statements. If the liability is remote, then no recognition and no disclosure. So we have already discussed about provisions and contingent liability. Now we go to the contingent asset. So the contingent asset is the counterpart of the liability, because remember, if liability sa isa ka party, then that is an asset on the part of another party and vice versa. So what is a contingent asset? A contingent asset is a possible asset that arises from past event and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. The contingent asset shall not be recognized because this may result to recognition of income that may never be realized. So, balik. Matawag siyang contingent asset if it is a possible asset. Okay? Parehas siya sa contingent liability nga possible siya. But ang kalainan lang kay ang contingent liability, pwede siyang probable, pero dili measurable. Pwede po siya nga possible and measurable. Meanwhile, contingent asset, klaro diri nga possible asset and it's not recognized. But if it is virtually certain that there will be realization of income, meaning na ay inflow of economic resources, then it's no longer contingent asset but automatic. It is an asset. Okay? Again, if virtually certain nga ma-receive ang income or ma-realize ang income, you do not classify it as contingent asset, but it will be recorded as an asset. Okay? What will be the treatment for the contingent asset? It will only be disclosed when it is probable. Okay? Going back to the definition, a contingent asset is a possible asset. Okay. But if the asset is probable, then the contingent asset will be disclosed. Okay. So, parehas ba siya diri? Di ba? Pag contingent liability na siya, di ba, possible obligation na siya. Pwede pa siya probable obligation but not measurable. Or pwede po siyang measurable obligation but not probable. So, the probability sa contingent liability definition, but sa contingent asset, kung probable siya, disclosure. Okay? And what would be the content of the disclosure? Brief description of the contingent asset and estimate of its financial effects. If the contingent asset is only possible, okay, or remote, no disclosure is required. Okay, balik. Kung ang contingent asset is virtually certain, kali siya, recognize the asset. What do you mean by recognize the asset? We debit the asset. Okay, so na journal entry. If the asset is probable or the item is probable, the asset item is probable na ma-receive but not virtually certain, even if it's measurable, disclosure lang ang pwedeng i-prepare. Therefore, you cannot see in the list of assets the line item of contingent asset. Wala na siya dito sa lista sa asset. The same with the contingent liability. It will not appear in the list of your liabilities. So, if probable ang contingent asset, it will be disclosed. Pero kung ang contingent asset is possible or remote, no journal entry and also no disclosure.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!